So there you are at a cocktail party, rubbing elbows with other real estate investors. You finally have double-digit units and you're letting everyone know. Other people are jealous of you. Talking about all those doors you have, you can finally talk about things like net worth and your cash flow positive. You've made it. One of the other investors, not having your impressive portfolio, casually mentions their FICO score. They've got a 780. They ask you what yours is. You tell them you have an 800. They call BS and ask you to prove it. You do a quick credit run, and lo and behold, you're sitting at a 680. How could this happen? It turns out your auto pay car payment was rejected from Wells Fargo, completely out of your control, and your credit score has been destroyed as a result. You've gone from being the talk of the party to the party jester, all in a brief moment. This fall from grace could have been avoided, but more importantly, can be fixed. And in today's episode of Mortgage Monday, we are going to explain exactly what you can do to put yourself back into good credit standing and take back your throne as the king of the party. Christian Bachelder, my man, we are here for another Mortgage Monday to give the people what they want. We're here talking about credit repair, what to do if you have bad credit, and how you can fix that, because it not only affects your ability to get financing, but it will affect the cost of the financing. So there's a lot of things we could talk about here.
But before we get to that, everyone knows that the most cash flow is in short-term rentals, but you might have zero experience hosting or live in a way too expensive market to invest. The Short-Term Shop can help. With agents in over 20 top short-term rental markets, the Short-Term Shop can find a property for every budget. Plus, their free self-management training leaves you with more monthly income instead of a big bill from a property manager. Start investing in short-term rentals today. Head over to theshorttermshop.com/BP for more info. That's theshorttermshop.com/BP as in BiggerPockets.
Let's start off by just discussing, how do tiers of FICO scores work when it comes to lending? What's the bottom tier and how do they increase from there?
This is something that I wish was spoken about more, and hopefully this episode brings a lot of clarity to this topic. If you think about it just on a broad spectrum, credit is based on brackets. And what I mean by that is that typically it's in ranges of 20 points. They'll usually start around a minimum for a loan product. Typically that's 620 to 640 on your FICO score. Just to let people know what a FICO score is. There are 3 bureaus: TransUnion, Equifax, Experian. With mortgage lending, we take the middle of the 3. So we pull your Tri-Merge credit score, which has all 3 of them. The report score that you get qualified with is the middle one of the 3. Okay, so you have a high one, a low one, a middle one. That's the one we want. Depending on where that falls, you'll be placed into a bracket. The first one is usually 600 to 620. A lot of programs won't go that low, but some do. Next one, 620 to 640, 640 to 660, and so on and so forth. What a lot of people don't know is that there are sweet spots for certain loan products. For instance, the FHA loan is very forgiving around the 680 mark, whereas conventional financing likes to see you 720 and up. A big misconception, especially for those people who obsessively worry about their credit, is people think, oh, I have an 800 and I pulled my credit, or I got a new car, whatever, and it dropped to 760. Oh my God, I'm going to get a terrible loan now. What's funny is that the highest bracket usually with 80 or 90% of loan products caps out around 740. So if you have an 800 versus a 741, you get the same loan.
I think that is a great point that you highlight. And that's why you are here listening to us on Mortgage Mondays, because many of you did not know that. I cannot tell you, it's been more times I can count where I ask someone, what are your plans for real estate in 2021 or in 2017, whatever. And they said, I'm working on getting my credit score higher. And they had this idea, like, if I can max it out to the most that I can get it, all of a sudden loans will be free. And I had to be the bearer of bad news. It's already a 770. Getting to like an 810 or whatever you're trying to do doesn't help. It's not like school where you could get to a 4.4 GPA and it's going to be beneficial for you. It just stops at a certain point. You can't get above a 4.0. And so there's been a lot of money that's been lost by people focusing on credit scores. It's also worth noting it is a factor that a lender will look at determining how risky of a borrower you are. There are many factors. The more money that you put down, the less risky the loan to you becomes. The better your credit score, the more likely that you're going to repay your mortgage. It is not the only thing they look at, or even honestly, one of the more significant ones. When you look at all the things that a lender is going to look at, debt to income ratios, loan to value on the property, FICO scores, where does credit really fit into that big picture?
Credit, I would argue, is maybe outside of down payment, the most important part, because credit is what determines your lendability. Credit is what determines your pricing, and ultimately whether or not you qualify for the product. Obviously, debt to income and down payment, all that is important as well. Don't get me wrong. But man, swinging from a 650 score to a 750 can literally change your closing cost by $10,000, $15,000, $20,000 sometimes. So it is significant and something not worth looking over.
That's a great point. Now, Another thing that gets brought up a lot in credit is the assumption is if someone has a bad credit score, that means that they are bad with money, or they don't have integrity, they don't repay back their loans. That's not always the case. What are some things you've seen that can lead to dings on credit reports that are not necessarily an indication that someone has bad character?
Oh, I got like the best example of this in 2020 when all the student loan forbearance was going on, right? So the government said you don't have to pay your student loans going forward. I think it was March of 2020. I want to say something right around that time period. But what they didn't tell you is that the February payment that was due in March was still due. So everybody got their March 1st statements. And gosh, I remember being a lender in April and May of 2020 when everybody was submitting loan apps. Everybody with a student loan had a late payment because they didn't make that February payment and they were told it was deferred and forbeared and you didn't have to pay it. And that's not integrity issue, but I had people that normally would have had an 800 who just had a late payment on an installment loan who were down at like 660 and they were devastated. They were like, I never have a late payment. I always make everything. And that's a great example where, man, it's sometimes a little bit is out of your control and just you end up in the wrong situation, but credit can have a big impact.
Yeah, sometimes it's clerical errors. I've had issues where Toyota was taking their payment for my infamous Camry out of the same account for years. And then Toyota switched their software for how they were going to take the thing out. And for whatever reason, it didn't do well with the bank. And so 1 month of payments were made. And then the next month, like the bank just looked at that, whatever their algorithm was, and said, oh, we don't want to send the money there. They just didn't send it. And then of course, Toyota does the thing where they send a letter and it gets lost in a stack of mail that I don't see. A couple months go by and the car payment hasn't been made. They call me. I'm like, oh, let me fix that for you right now. It's fixed. I still have missed payments on my credit report that are absolutely devastating to your score. That doesn't mean that I wasn't going to pay or I couldn't repay. It gets lost in the shuffle, and busier people that have a lot of stuff going on, this can happen very easily. You switch from one bank to another, you open a new account and you fill out a new auto payment thing. The person overseeing that works at Chase or works at Wells Fargo might not be paying attention, might enter something wrong if you do it on the phone. It's not always your fault, but it can have a big impact on your credit score. So if you are someone who does have poor credit or more poor credit than what you wish you had, that is not a reason to feel shame. That is not a reason to be embarrassed or not reach out to talk to somebody about it, because in many cases, you're in the same boat as somebody who's made very honest mistakes that is not a poor reflection on them at all. So Christian, what can you offer for the people who do have credit issues? It's not where they want it to be. They want it to improve.
Yeah, I'd break it up into two brackets. One is the minimal repairs and two is the big stuff, the heavy hitter stuff. The first option is if you have a 695 score, let's say, right? And there's that big pricing bracket change to getting over 700. A lot of times internally, we can do small adjustments with your balances of like your credit card. You can pay $150 down on your credit card and you may get a 5-point increase. We have a software that we can kind of analyze that we offer for free for people who do mortgages with us. We'll build that into our pre-approval. So if we see that you're really close to a bracket, we just do that automatically. You don't have to request it. The second bracket of people though are the people who do have late payments, people who do have collections, people who have derogatory marks, right? They have things that they have missed. Fun announcement is us here at the One Brokerage, we have partnered with a credit repair specialist. Just to give a little bit of idea of the success that they can have. We had a client submit a loan application with us 4 months ago. It was in January. We're recording this in April. They came to us with a 658 credit score. That was what their score was. They had a couple late payments, yada, yada. We sent them over to our credit repair specialist. He was able to get or negotiate the late payments off of her credit report, and we ended up closing a loan with her at a 725. Literally probably saves her $10,000 to $15,000 in closing costs. Huge win for the client. Obviously, better long-term loan product, better closing costs, kept more of that money in her pocket. It just needed a phone call. It just needed to be in the right, network with the right people who can put you in contact with these people. Depending on where you are, we would determine what course of action is best for you, but we can help you no matter where you are.
And approximately how much money does something like that cost?
I think she spent like $800. It wasn't that much at all. I mean, you consider you're spending $800 and she saved probably $15,000 in closing costs, right? I mean, it was more than worth it.
If you're a shopper, if you just bounce from lender to lender looking for the one that you think might have the best deal, they're not going to be interested in helping you save $14,200 on your loan after referring you to the credit repair specialist, because there's nothing in it for them. So having that real relationship is a way that you can end up saving money over time. And at BiggerPockets, we are all about that. Bring more people into our community, share the word of what you're doing, share this video with somebody else. If you heard this and you thought, oh, my sister has credit issues and she's embarrassed about them, send your sister this video so that she knows she's not alone. Many people are in this problem, including me. I've had late payments exactly like I said, from a stupid car payment of $350 that were absolutely devastating to the loans that I was trying to give for real estate. It's not a great system, but it's the system that we have to work with right now. So let's do all our best to take advantage of it. Christian, any last words before I let you get out of here?
No, I'd reach out, guys. Christian@theonebrokerage.com is my email if you're interested in our Discord or our community, or find us at theonebrokerage.com. David's on there as well. And get on BiggerPockets. We're both on there. We respond to our DMs. We respond to the forum posts. Get on there, ask your questions, reach out, get the right network around you.
There you go. So find us on Discord at DG's World. You can have conversations with Christian in real time. I call him Big Brain for obvious reasons. And I want to know, leave a comment on YouTube here telling us what is the silliest thing that you've ever heard of that someone got their credit score hit for. Doesn't have to be you. It can be a friend of yours, or it can be a person that you know. But let us know what you have seen that has caused credit disrepair and what it was that made that happen. I want to have a list of different silly things that have caused bad credit for everybody to read. Thanks, everybody. We will see you on the next edition of Mortgage Mondays here at BiggerPockets YouTube.